Hello everyone, and welcome back to my channel, The Trading Mystic. I hope you're doing well wherever you are. I'm back again to take you through 2 more trading strategies. So let's get started. In this video, we will take a look at 2 trading strategies based on technical analysis. One for long trades and the other one will be for taking short positions. As usual, I will share the backtest result and also do some analysis around it. You will also get to see a couple of examples on the trading chart. And we will test these strategies on a stock trading in the New York Stock Exchange in the US. Okay. I will not be able to cover the basics of technical analysis. For that, very soon there will be a playlist created to take you through the fundamentals of technical or even quantitative analysis. So here is our first trading strategy for the stock WALT Disney Company, which trades in the NYSE under the ticker symbol DIS. This is going to be a positional buy or long strategy, which means we will buy first and sell after a few days. We are going to make use of 3 to 4 technical indicators or oscillators here. The first one is the average true range, also known as ATR. So we will make use of 14 period ATR. There is something called a money flow index, MFI. So we will make use of 14 period MFI. Stochastics, many of you would know that consists of the percentage K line and the percentage D line. We will just consider 21 period percentage K line in this strategy. Now you can test the strategy with these 3 indicators, but when you bring in the 4th one, which is the relative strength index or RSI, it sort of gives you the same return, but reduces the number of trades, which means you earn the same return by trading less, which is a good thing. So we will include 14 period RSI. Now let's take a look at how this strategy works. There are 4 conditions here. The first condition says that the current value of percentage K line has to be greater than its previous day's value. Condition 2, the current MFI value has to be less than its previous day's value. Condition 3, the current ATR has to be greater than previous day's ATR. And condition 4 says that the current RSI has to be greater than 30. So when these conditions are met, we will buy the stock. We check these conditions 5 to 10 minutes before the market closes. That's when the volatility reduces and we have an estimate of the price and the value at which the stock as well as the technical indicators are going to close. So as soon as we get a signal, we buy the stock and we're going to square off or sell our position on day 3 at market closing. Here is the trading view chart of Walt Disney Company, and let's take a look at how this strategy works. At the top, you should be able to see the open, high, low and closing price of the stock on any day. Here I have loaded 3 indicators out of the 4. The first one is stochastic, and this blue line is the percentage K line. And let's double click it. And this allows us to configure. So percentage K line, the length should be 21. Percentage K smoothing will be at 3. And percentage D smoothing is something that we can ignore because this is not going to be used in this strategy. So I'll just click OK and go to the next indicator, which is money flow index. This is again a 14 period money flow index. And right below in red is the ATR. Okay, 14 period ATR. So let's go to the 2nd of September to run these conditions. So the first one, we need to take a look at stochastic. So percentage K line closed at 66.38, as you can see to the left. So 5 minutes prior to market closing, it should have been around 66. So we're going to compare this with the previous day's closing, which was the 1st of September. Percentage K line closed at 63.81. So clearly the current value is greater than the previous value. Let's look at MFI on the 2nd of September. It was at 51.19. Is that less than the previous day's value? Yes, the previous day on the 1st of September, MFI closed at 66.84. So again, condition 2 is met. Condition 3 says that the current ATR value has to be greater than its previous day's value. So current ATR value seems to be 3.30, which is on the 2nd of September. When we compare it with the value on 1st of September, which was at 3.27. So clearly the current value is greater than the previous value. So condition 3 is met. We're going to check condition 4, whether RSI is greater than 30 or not. Now, because this is a free TradingView account, I cannot add more than 3 indicators. So I'm going to remove ATR and place RSI here and then check. I have loaded the RSI here, the red line. This is a 14-period RSI. Let's go back to the 2nd of September and look for RSI closing value, which was 58.24, which is greater than 30. So condition 4 is also completed. So it's time for us to buy Walt Disney. Okay, so take a look at the top. On the 2nd of September, the closing price was 181.86. So we will buy around that price before the market closes. So if this is day 1, this is your day 2, and day 3 is 7th of September when we will sell the stock at market closing. So the closing price was 184.34. So we're going to sell it around that price. We bought at 181 approximately. We sold around 184. So that's a profit of about 1.4%. Time to share the backtest results of this long strategy for the period 2014 to 2021. The total number of buy signals or trades were 91. The win rate or hit ratio was 71%. The maximum loss we incurred in a trade was close to 7%, while the maximum profit in a trade was 14%. The cumulative return of the strategy was 121%. I've also mentioned the buy and hold return, which means had we bought the stock at the beginning of 2014 and sold at the end of 2021, we would have made 104%. Now, this doesn't include corporate actions like dividends. Also, I have noticed that there were no stock splits or other corporate actions like bonus issues. So the cumulative return of 121% kind of looks fine here. Let's take a look at this strategy return plot and analyze. All the red dots are the trades that generated negative return, while the ones in blue are the ones that generated profits. If you recollect, I said the maximum loss in a trade was about 7%. So you can see that trade here, which happened between 2020 and 2021. And the same period, we also saw a trade which made us the highest profit, which was about 14%. Okay. 2015 to 2016 had 100% hit ratio, right? All the trades were profitable. Also, if you take a look at 2020 to 2021, sort of looks decent. We have 4 loss-making trades, of which these 2, this one is pretty close to the -5% line, and this one is the -7%. But if you take a look at the profits, we have one trade here that made about 6% and this one at 14. And then there were several other trades that made us, decent profits. Now, let's quickly look at how the cumulative return is calculated. So, assuming we start off with $100 in this trading strategy, and this is where we get our first buy signal. All right. So this becomes day 1. And as per the strategy, we're going to sell on day 4. Okay. So here, as soon as we got a signal, we invested $100 into this strategy and we sold on day 3. Assuming we make a profit of 5% in this trade, when we sell, our balance is going to become $105. Okay. In case of a loss of 5%, our balance will become $95. Right. This is simple mathematics. Now, let's assume that we get our next buy signal here. Okay. When that happens, we're going to reinvest the entire balance and buy stocks. Okay. Whether the balance is $105 or $95, we are going to reinvest the entire amount and buy stocks. Now, we will follow this rule till the time we make use of the strategy. Another thing to note here is, for example, when I bought here, right, I used the entire balance of $100. So on day 2, I did not have any balance in my account. So if I get a buy signal on day 2, as per the strategy, I will simply ignore it. Okay. So that's the logic here. And assuming your balance turns out to be, let's say, $500 after a certain period of time, it means you invested 100, which has now become 500. That's a return of 400%, and this is also known as cumulative return. Let's look at the next trading strategy, which is a positional sell or short strategy. In this case, we will sell first and buy at a later date. This can be done if your stock exchange allows you to carry forward short positions in a stock. If not, then you can certainly trade in the derivatives futures market. Okay, we're going to make use of 3 indicators here. The first one is money flow index, MFI, 14 period. We will also make use of RSI, 14 period, and the moving average convergence divergence, popularly known as MACD. We'll keep the default settings, which is 12, 26, and 9. The strategy conditions are pretty simple and just 3 of them. Condition 1, the current MFI value has to be greater than the MFI value the previous day. Condition 2, the current RSI value has to be greater than 70. And condition 3, the current MACD histogram value has to be greater than the value of MACD histogram the day before previous day. So when these 3 conditions are met, we go ahead and sell the stock or futures. And it's the same as strategy 1. We look for these conditions 5 to 10 minutes prior to market closing. And as soon as we get a signal, we will sell and we will buy back on day 3 at market closing. Now, let's quickly take a look at the chart and understand how this strategy is traded. So once again, in front of you is WALT Disney chart on tradingview.com. And as you can see, I have loaded all 3 indicators here, the MFI, RSI, and MACD. Okay. So let's go to the 31st of December 2020 to check all 3 conditions. So condition number 1, MFI was at 79.22. Is that greater than the MFI value the previous day? Yes. So previous day it was at 76.06. So the current value is greater, which means condition 1 is met. Condition 2, RSI is at 74.97. That is also greater than 70. So condition 2 is met. Let me quickly expand MACD and make this clearer. Okay, so what do you see here? This is the histogram, all right, and its value can be seen here. If it's light green, the value will be in light green, and if it's a darker shade, then you will see the value in a darker shade. Okay, so let's go back to the 31st of December and take a look at MACD value. That was 0.17. So we compare it with the value a couple of days back. So we go to the 29th of December. MACD closed at 0.1. So certainly the current value is greater than the value the day before. So condition 3 is also met. This is where we go ahead and sell Walt Disney stock or futures contract at the closing price, which was 181.18. Of course, you need to check the price in the futures market if you're trading there. But in this example, we're going to sell at 181. So this is day 1, day 2, day 3, which is the 5th of January 2021. We're going to buy back at the closing price of 178. Okay. So we sold at 181 and we are buying back at 178. That's an approximate profit of 1.5%. Let's look at the backtest results of this short strategy. Once again, for the period 2014 to 2021, we had a total number of sell trades at 35. The hit ratio was 69% approximately. The maximum loss in a trade was 3%, while the maximum profit in a trade stood at 9%. And the cumulative return of the strategy was at 38%. That's all I had for you in this video. I hope you liked the strategies. The objective here was to share them with you, just to give you an idea. Feel free to go ahead and tweak these strategies. Try your own combinations and see if something else works for you better. But whatever you do, please do not trade till the time you've done your research, backtesting, maybe paper trading, and you are confident enough to take risks. All right? I'm going to be back soon with another interesting video. So if you want to stay updated, go ahead and click that subscribe button at the bottom of the screen. You take care. I will see you soon.